conventional financial system is a transaction based on interest rate that is implied on borrowed funds or safe deposits in bank. In contrast, Islamic financial system is finance or banking activities that adhere to Sharia law, which prohibits interest rate in any transaction. Islamic financial system holds two fundamental principles, which are sharing of profit and loss and prohibition of interest on loan.
The difference between conventional and Islamic financial system. The main difference between Islamic and conventional finance is the treatment of risk and how risk is shared. In addition, the two main forms of Islamic finance are bank finance and issuing Islamic securities called sukuk. In conventional terminology, we might think of this as debt, which bank loans and bond issues respectively, but that is inaccurate. Those categories cannot be applied to pure Islamic finance. In Islamic finance, interest is prohibited. If an enterprise is financed by debt with an obligation to pay interest, the risk of the business is not being shared fairly. Instead, Islamic finance requires that finance is provided on the principle of profit and loss sharing. Under Sharia law, finance and can be provided through several types of contract. Each type specifies how risk is shared between the enterprise and the supplier of finance. For example, one such contract is mudarabah. This specifies in advance how profits and losses are to be shared between the financier and entrepreneur. Profits are shared in a predetermined ratio, so the financier's returns fluctuates according to business profitability. Losses, except those caused by the entrepreneur's fraud or negligence, are to be borne entirely by the financier. Contrast that with a conventional loan where the financier has a contractual rights to receive interest and capital repayment is irrespective of the condition of the borrower's business.
The Islamic financial system operates the same as the conventional system, which provides all the functions that are expected from a financial institution. The services provided in both Islamic and conventional financial system is deposits, which are collected from savers for reward. There are three types of deposit facilities, which are saving account, current account, and investment account. Next is the financing facilities. There are two types of financing activities, which is financing for business and financing for individuals. The financing activities include the credit card, which allow cardholder to borrow funds to pay for goods and services. The short-term loan is a loan made to meet working capital requirement. A medium to long-term loan, a loan made to purchase or building of fixed asset by firm to expand or replace the existing asset. Leasing is a source of financing, which useful part of an asset is transferred to lessee for a great amount of rentals. The agricultural loan have short and long-term loan. The short term is made for farmers for seeds and fertilizer, whereas the long-term loan is used to develop additional land and purchase of equipment. The house financing will help the customer to finance the purchase of residential properties. And lastly, the investment, which its purpose is to maintain the liquidity. Both institutions also provide other services such as letter of credit, letter of guarantee, money order, foreign exchange, check, bank draft, and advisory service.
Despite having some similarities with Islamic financial system, there are some issues in conventional financial system which is not in line with what Islam have taught. The first issue is riba. Riba refers to interest charged on loans or deposits. Islam forbids Muslims to taking or offering riba in any transaction. Allah said in verse 130 of Surah Al-Imran, "All believers, do not consume interest, multiplying many times over, and be mindful of Allah so you may prosper." Conventional financial system often imply interest which is not in line with what Islam have taught. Riba prohibition is based on arguments of social justice because the transaction involves interest benefit a party while the other party incurred loss. The second major issue in conventional financial system is horror. Horror means a lack of clarity and ambiguity in the basic elements of a contract, be it in price, subject matter, or any parties in the contract. Prophet, peace be upon him, has forbidden the purchase of the unborn animal in the mother's womb, the birds in the sky, or the fish in the water. Whereas in the conventional financial system exists clearly in insurance contract, where there is no subject matter exists in the contract. The last issue of conventional financial system is gambling, or referred as maisir. Maisir is the easy acquisition of wealth by chance, whether or not it deprives the other's right. In verse 219 of Al-Baqarah, Allah has prohibited gambling together with wine consumption for a reason that the evil those things bring is greater than benefit. Islam encourages hardship to acquire a wealth, but with gambling, money is earned without any work or effort. Gambling also exists in conventional insurance policy, even it is not that obvious. The insured may never have any claims and therefore never receive any consideration for payments they made. Similar to gambling, which a party is having a total loss while the others got benefit from the contract.
1. Promotes financial justice. Financial justice is the main principle of the Islamic model. Islamic banking creates a balance for the net profit or loss between the lender and the beneficiary rather than throw it all on the entrepreneur. If a project is financed by the Islamic bank, the output of the project will be equally distributed amongst both parties. If the financier is expecting to receive profits for a certain project, he should also agree to carry a share of the loss. 2. Financial inclusion. Muslims refrain from banking through the conventional banking system since it is based on paying or receiving an interest which is strictly prohibited by the Sharia law. In fact, almost 3/4 of the world's Muslims remains unbanked. Islamic banking removes these barriers and allows Muslims to benefit from the financial system. 3. Reduces the impact of harmful products and practices. Islamic banking restricts the goods and services that are restricted in Islam, such as alcoholic beverages, tobacco, gambling, pornography, etc., irrespective of whether they are legal or not in a given country. 4. Strengthens financial stability. In Islamic finance, the investments are approached cautiously and the decision-making process is carried out in detail. Unlike the conventional banking system, the companies who appear risky are usually kept away from financial institutes. This is why, during the global 2008 financial crisis, the Islamic financial institutes remain untouched. With careful audits and analysis, the Islamic Finance Institute lessens the occurrence of risks and enhances financial stability. 5. Ethical and moral values. The ethical and moral values within the Islamic banking system are one of its salient features. This plays an important role in promoting socially desirable investments and better individual or corporate relationship as well as behavior.
In conclusion, the basis of Islamic finance is a moral system of finance that emphasizes the balance between profit activities and non-profit activities under the guideline of Sharia. Although both institutions operate and provide the same activities, the difference between these two are the treatment of risk, where the conventional system imposes interest in the loan as an obligation, while the Islamic system implements the principle of profit and sharing. Considering all the issues with the conventional system, which includes the prohibited element in Sharia, one should choose Islamic financial institution when they do their transaction.